Hello guys, hi everyone, welcome. Nice to see you guys. So as you guys can see on the screen today, we're going to talk about some of the trading strategies that build on the MT5 order. So hopefully it can help for those experienced trader. Today might be slightly more brief, I would say. Yep, it will be more suitable for beginner or just want to sharpen up your trading knowledge. Then yep, it is a sessions for you. Yeah, but it's not suitable for people that has been trading for quite some time. And also today I probably might just use the live actual charts to discuss along with the trading strategy. Hopefully it can help you in your upcoming trading journey. Because I see like some of the very familiar name, so I guess some of you guys here has been quite well equipped and is ready to make profit in the market. Right, so I guess we will just wait for a minute or two. Let's see if any more people joining us in today's session. Again, today we're going to talk about some trading strategies that's built on MT5 order, pending order. Hi, good afternoon, Almo. I hope I call your name correctly. Hi everyone. So I guess some of you, from Asia's regions, then it's a good evening to you, and then some is good afternoon, and probably you guys are from the America time zone, then it's a good morning. Hi, Daniel. Daniel from Nigeria, you're welcome. Hello, first time to attend. From Japan, Mary Jane. But sorry to say, your name, your name doesn't sound Japanese. Hi, Alma is from Sudan. Hi, Eric. Filipina. All right, I see. So, yeah, you work in Japan, and I see Japanese yens is quite strong recently. So hope that you can make handsome amount of money in Japan. Hi, Andrea from Jamaica, John's from New Zealand. Hi, so yeah, without further ado, allow me to read out the today's session's risk disclaimer before we start the session. This webinar is for informational and educational purposes only. Nothing discussed today should be considered financial advice, investment recommendations, or an offer to trade any financial instruments. Trading CFD and other leverage product carries a high level of risk and may not be suitable for all investors. Due to the nature of leverage, losses can exceed initial deposit, so it is important to fully understand the risks involved before engaging in trading. While we will discuss market analysis and trading strategies, these are purely for educational purposes and do not guarantee success. By participating in this webinar, you acknowledge that Pilpram and I are not responsible for any trading decision you make or any losses incurred as a result. Right, this is the risk disclaimer. Right, hi, once again, hi everyone. Everyone is welcome. Thanks. And yep, today's session is presented by Pilpram. And yeah, as you can see on the screen, today we're going to discuss some of the trading strategies that's built on MT5 pendings order. All right. These are the topics that we're going to cover today. I will first discuss some what are different types of MetaTraders orders that we have, okay, that offered us, and also I will try to put up these 4 trading strategies: breakout strategies, pullback, news trading, and scalping. And I will discuss with you what kind of a trade pending order that's suitable when you want to deploy this kind of strategies. And lastly, I will also put out the economic calendars for the next 5 trading days, and I will mark down some of the very crucial or critical day, and you might want to take extra cautious when you trade on several or some of the assets, right? Right. So at first, let us understand type of the order. I don't know, like how many of you guys here is new trader, okay, just started, and then how many of you? So I see there's Andrea have problem with your speaker. So I guess everyone can hear me well, right? So Andrea, can you hear me well? Hi. Can I? Right, cool. So, yep, let's start. Okay, so I would say in general, we have 3 different kind of pending order, and one is very simple, that there will be market execution. So again, how many of you guys here is already very veterans, have very experience in trading, which maybe you guys already can tell what are the difference between each of the order types. But I just want to also clear the doubt for all these beginners here. I guess there'll be a few of you amongst all the audience today that are quite new in trading, right? So hopefully I can clear your doubt. All right. First one, market execution. That the name tells us all. That would mean that one click, then you already get your order executed. Whether you are in a long position or short position, you click buy, then you are in a long position. And if you click sell, it will straight away get your sell order at the market price. So sometimes, like just now, I think 3 hours ago or 4 hours ago, you can see, just if you guys has been trading on gold, you can see gold was the first time touching 3,300 mark, which is another fresh all-time high. So I know some of you guys want to join in, and you think that this is very, very bullish, and then you can't wait. So you just click on buy, you straight away can enter a long positions on the gold. But on the other hand, some of you guys might have a bit of experience in the markets. You might experience sometime where there is like a false breakup, and also sometime when an asset prices break on or break above to some critical level, it might have a chance to pull back. Okay, whether or not it face a very strong profit-taking sentiments or panic selling sentiments, then you want just jump in straight into a sell order. Then you can just click on the sell, okay, with the market execution order. Then it will straight buy in a sell order at the current market price. So this is very simple market execution. So next one is limit order. So what is limit order? So if you guys can see this picture over here, so it means that for the example of a buy limit, it means that now the current price is over here. Okay, for example, let me just pull out the, yeah. So for example, you want to buy, this is the gold price, right? So for example, now this is the current price of the gold. So yep, you are not comfortable to buy in. You have this bullish bias on gold. You think in the upcoming sessions, gold might just continue to break another high to another high, but you are not comfortable to buy right away. You think that might have a chance to witness a pullback. You might think probably it's going to have some sell-off because, yeah, profit taking and whatnot. You are more comfortable to buy in a long positions on the gold at, for example, here, because here previously it's like a sideways range. There's a lot of liquidity over here. So you might think probably later on gold price might come back down to 3227.8 around here. And then it will continue to break another high. So this is this buy limit order. okay, where the price is over here, and you buy in at a lower price, and you hope that later on the price will rebound to next level, and then you can make profit. This is the room of your profit. Okay, so for example, yeah, your room of the profit is about here. So this is buy limits. Vice versa. So at the same time, let me say, so for example, like this. Okay, so if let's say now, you probably think like, oh, the gold's already hit new high, and now it has a, it breaking the previous low. So you might think that there's like a U-turn, probably the gold might just have a very sharp drop, and you want to capture the entire trend of the downtrend. But you think this is the very fresh breakout. All right, this is the very fresh breakout, and you might think it might just pull back because when market is very indecisive, a lot of power. I mean, the buying power and selling power is fighting each other. So you might think, oh, I'm more comfortable to jump into a short position at a higher price. So in this case, probably at 3114, and you think that eventually the gold price will just again reaching 3K. Okay, probably. Okay, this is just an example. All right. So that's why this is your TP, for example, and you might want to set a sell limit order at 3114. Okay, which means that you are anticipate the gold price to jump back to this price levels, and you after that you think after touching here, you think the gold might just continue to drop. So you're more comfortable in this kind of price actions, this kind of behavior. So you can set up a sell limits order so you can capture a longer trend. Okay, so this is a very simple explanations on what is buy or sell limit. Okay, moving on. I hope everyone here understand what I'm saying, right? All right, and then moving on is buy and sell stop order. So what is stop order? Stop order is mean a very different or a very opposite way of the example just now. Let me reset my chart. Sorry, that is a bit laggy. Okay, no. Okay, never mind. I can still use the chat here because it's just example. All right, so you think now the gold price is dropping, all right, it's dropping, but you're still not certain with the upcoming price. How can you make sure now we are trading in a downtrend, or it's just a fake breakdown, and it probably is going to continues to climb higher. So in order for you to make sure that like you are into a right direction, which is a downtrend, for example here, you might think, oh, if only the gold price go back down to break this very strong or very critical support level of you at 3072, then you can set a sell stop order here. So it's meaning to say later on, if the gold touch here again, drop beyond this level, you already jump into a short position at this price because you already set a sell stop order here, and you think that after it drop here, there's no way for the gold to come back. I think you will just straight away go lower and lower. So this is the logic behind if you are setting a sell stop order. Okay, a very opposite example is that now it's probably in a downtrend, but it's very strongly believe that because in a very, very long term, it is trading in a bullish trend. Okay, it's always trading in a high price pattern, high price pattern. So you think that probably it's going to break another high in a short period of time. So how can you make sure that? So now it's already in a slight downtrend, but okay, no worry for you. So you might think that if the gold price again come above its previous high over here, you might just want to set a buy stop order. It's mean to say when the gold price once again go back to this level, go across these price levels at 3153, then you can jump into a buy order at this level. It means that the buy stop order is already triggered. So you jump in here and then you hope that the gold will just continue to climb higher and higher, higher and higher, and then you can capture more and more profit. All right. Now, the last one that will be slightly tricky. Buy stop limit or sell stop limit order. So what does it mean? So it means that, let me clear the chart. Right. So you want to make sure that now we are trading in a, let's say in an uptrend. So you want to jump into a buy order. So you want to make sure when you want to make sure that now we are trading in an uptrend. So what you do, you really wait the asset, the price to go to break the previous high or another high. Okay, let's say for example, you think that only if the gold price break to 3176, only you can consider it as a bullish trend, a very strong bullish trend, because it break to another all-time high over here. But then you think that this is not wise. This is not wise to jump in straight when it touches here, because most of the time we know in the markets where we experience a pullback, okay, where it touches a new high, sometimes it will face a selling pressure, or people just want to sub to take profits when, because you know some of the trader out there just satisfied with a very short range of profit. So you think if it touches here, I want my order to fulfill at here. Okay, you don't want to buy at a very expensive price at 3176, but you are more comfortable to get your order to fulfill at 3153. So you set this a buy stop limits. It means that when later on the gold price touch here, it will straight away trigger a limit order at 3153. So when touch here, trigger the order here. So if later on the gold price really come back, have a pullback, touches here, then now you really got into a buy order at this level. Okay, at these levels, and then finger crossed, it just continue to goes up. Then you will be very, very happy, because all the price levels that you predicted, that you analyzed, and then you got all the lines with you, got fulfilled. Then you are like the trading gods, all right? But I think that is quite hard, because market not always go with your script, okay? Because everyone's like billions of traders out there in the market across the globe. Okay, we have Euro trader, America trader, Asia trader. Everyone have their own mindset. So it is very, very hard to have the markets that follow 100% of what your script say, okay, what the scenarios that you come up with. Okay, so right, so moving on, I hope that you guys are clear with all these very simple order type, so you can really find it over here. So this is the MT5, okay, and then hold on. So here is the order type. Okay, if you go to the pending order, you can always find all these different types of pending order. So it really depends on your trading strategies, or your behavior, or like on how comfortable you will be on different way that can suit you the best. Okay, and then you can go for the best order that you want. And also later on, if you are, you're comfortable with some of the strategies that we discussed, then you probably want to try out one or two of these pending order that is available on MT5. All right, so let's straight jump into this different of strategy. First is very, very simple. That is breakout strategy. So what is breakout? So it requires a trader to at least identifies where is the resistance levels, where is the support levels. That's why, because you have to refer to the lines, okay, those levels, for you to identify that whether or not there's like a breakout. Okay, a breakout means that this is absolute logic, where it break to a new high or it break to a new low. It just indicates that the trend is very solid. The trend is like what you think of. So some of the traders out there is, you know, they want to have a more simple way of thinking when they trade. So they will trade up with the breakout strategies. So I would say the breakout strategies now is very suitable when you trade the gold, because you know, for since last week until today, you know, like how many percent that the gold has already gained. Okay, let's go to the daily, right? So yep, you know, for the entire March, the gold has been, you know, breaking a record high to another record high, and it has already gained by some 9%. So yep, if you are an enthusiast of using the, you know, breakout strategies, you probably can really benefit from all the breakup. All right. So there's three types of breakup. One is like a horizontal, one is a patterns, one is trend line. So I'm not sure like all of you out there is really, you know, understand this all kind of a breakup. So I may just want to give you one of example here. So I may just go for patterns. So what is the patterns out there that we can have? Probably, for example, we can go for, sorry that my internet is a bit laggy today. Yep, maybe you can go for this one. So you can see that now for these patterns, right? We have this, you know, higher high patterns, or sometimes we call it like a ascending triangle pattern. So it means that, you know, I hope that everyone here can notify there's a breakout here. So, you know, it has been capping the gold price at these levels at near 2926.6. All right. So if you know you're gonna tell yourself, even this you know, happening, okay, you're gonna think that, well, today why this is not working out. Never when the price is reaching here, okay, then you're probably going to think that, oh, once the gold price break above this resistance, this very critical strong resistance, it means that it is the start of the bullish trend. Okay, so I want to capture the entire bullish trend. So what to do? I thought of this breakout strategy, so I can set my order here. So once it's breakout, I can straight away jump into a buy position, and I hope that I can fully capture the upcoming bullish trend. So this is the logic behind, this is the idea behind the breakout strategies. So what kind of order that we can use in order to fully deploy this breakout strategies? One is buy, sell, stop order, okay, or even with the scalping strategy, because for a scalper, you are just satisfied with like tens or not below 100 pips of a profit. And maybe you also can want to try out with the stop limit order, because sometimes the retest will happen. So what's the retest? It means that you probably think that once it's breakout, it might have a chance to retest back to the previous resistance levels, only it will go up. So this is the retest. So yep. Sorry. So this is the retest, and a buy stop. Then I already explained to you what is the buy stop. It means that when you can already set nicely the buy stop order over here, which is at, let's say, 2930. So once it break above 2930, then it will straight trigger a buy order and jump into a buy order, and you hope that later on the bullish trend will be strong enough for you to capture the next TP, for example, at 3K, the very critical psychological resistance level for the gold. Okay, so this is the breakout. But what is the drawback of using the breakout? Is you have to be always cautious for a false breakout, because sometimes the market maker is out there. So you don't ask me what is market maker, whether or not it is true that we have a few players that can really manipulate the markets. I would say sometimes it's quite obvious. You can tell, you know, we have a few institutional players out there that can really have some say in the markets, really have the power to have a strong impact in the markets. where, you know, sometimes the market really touch some of the liquidity grab and go to the opposite direction. So again, here I also want to take this opportunity to warn you guys, really need to do your risk management very, very well, meaning to say, when you enter your positions, you always want to set your stop loss and also your TP, and you don't change it too often. Okay, so be a disciplined trader. Okay. All right. Moving on is a pullback strategy. So just now we already touched that sometimes some of the trader out there adopt this breakout strategies, and probably you might experience a pullback. Okay, some, you know, you just scared off like why you a breakout and then you already jump into a position. You, like, for example, you jump into a buy position, while later on it just go lower, go even lower, and then maybe sometimes hit your stop loss levels, and then you lose out, and then you will just be sitting there and thinking like, what happens? I thought, you know, when there's like a breakout happen, it means that the trend is very, very strong. There's no wrong for me. But yeah, you know, sometimes pullback happens. Okay, this is quite normal. I just want to clear your doubt here. This is not your fault, but sometimes the market, it just happen to be like that. Okay, so, and also sometimes we have a very, very deep pullback, and where you probably want to pull out the Fibonacci retracement, and then I don't want to go into detail, but then if you guys know what is fair value gap, you can refer to the fair value gap. You know, this is also part of the pullback strategies that you might want to be aware of. That this is a pattern in the market that is happening in the market, so you shouldn't be too surprised when this kind of thing happens. So what is Fibonacci? So let me pull an example for you. So for example, just now I think I marked down some of the example here. Right, yeah, never mind. So, okay, for example here, so what is a, you know, Fibonacci now? You think, you know, for example here, all right, when it reaches, so previously this go like trading in a higher pattern, but later on after it reaches this new high, it has a structural break. Okay, it means it has already broken its previous low. It means potentially we are now looking at a bearish trend reversal for the gold, and you want to know, probably you'll be just watching, okay, observing, and you know, you're not sure whether or not you want to jump into a short position. Okay, you might be just observing, and then now you probably think of a pullback strategy. So when it's already happened up to here, and then now there's like a rebound, so you're not sure whether or not this rebound is a pullback or it's like a real bullish rebound, and then you probably want to seek for help of a Fibonacci retracement. And you can see very nicely that, you know, for the entire downtrend over here, so this is the entire downtrend that we want to pull our Fibonacci, and you can see very nicely that when it almost stopped at the very magical 0.618 of the Fibonacci retracement, and it continued to drop. So this is like a very classic or very typical pullback that is often happens in the markets, where, you know, you can always build your strategies surrounding Fibonacci retracement. I don't want to go deep into details of like how we can use the Fibonacci retracement wisely. If you want, you can let your account manager know, and then next time we can prepare a topic you know, surrounding the strategies built on a Fibonacci retracement. Okay, and another opposite example for you guys probably can be at, you know, here. Okay, so for example, now when another structural break, okay, another structural break, and then you might want to pull a Fibonacci over here, okay, and then, you know, the lesser it retraces, it means the strongest the stronger the trend is. So it means that when it, you know, when the Fibonacci retraces to 618 is where you can expect a softer rebound or a softer technical rebound, or, you know, as opposed to where if just retrace to above 382, then you might think that this is a very short or minor technical retracement. It means that most of the people in the market out there really think that the gold price can have a very good chance to continue to trade higher and higher. Okay, so this is a very brief example of the explanations when you use the Fibonacci retracement. Okay, so this is another opposite example for you to use a Fibonacci retracement where you can pull out the Fibonacci and then to see where it retrace to and where is the potential rebound level for the asset class. For example, here is a gold. Okay, where the gold will rebound, so you probably can set a order here, a pending order here. So let's move on. So how you're going to use this pullback strategy is where you can set a buy-sell limit or a buy-sell stop limit. Like how? Okay, for a limit order, it means that you wait because you already know that the price probably is going to retrace or probably is going to pull back, and then you just wait there. So that is why you set a limit order there. But then why you want to set a stop limit? It's probably because you are on the right side, okay, the right side trading strategies where you let the price taken the actions already move towards the directions, only you take actions, then this is the logic behind you can use the stop limits or order to use these pullback strategies. But I also at the same time want to warn you guys that is not necessary always you will experience a retracement. Sometimes when the market is too bullish, then no one can wait you. When if you want to use another hour or two to think of the markets, then you may just miss out the chance. Okay, the trading opportunity out there is just gone. For example, for the first time when gold break above 3,000, let's say, it probably just go all the way up. There's no retracement, so there's no pullback, and you might just miss the chance. But again, I want to warn you guys, there's like hundreds of asset classes out there in the markets, so that is okay for you to miss out one chance or two chance. Okay, because there's tons of trading opportunity out there, so you don't really force yourself to trade. Okay, so it's okay when you miss out one or two chances out there. Okay, because for the forex market, it operates 5 days a week, 24 hours. Okay, and crypto markets 7 days a week, 24 hours. Definitely, there's a lot of chance out there, so it's okay to just miss out one or two. All right, and thirdly will be news trading strategies. So yeah, it will be very obvious. News trading is where you really a risk level. You want to trade with more risk, but because higher risk equivalent to higher chance to win profit. All right, so a very typical news trading strategy will be you look at the non-farm payroll, you look at CPI, and also you look at the interest rate decision. So obviously, because you already anticipate this, this kind of thing, this kind of event, so you probably just want to set a pre-order before all this happens. For example, non-farm payroll every Friday, every first Friday of the month, and you might just want to already set a pre-order and before the NFP was announced. Okay, so I no need to further elaborate on like how risky it is and also how volatile, how fluctuate the price would be, especially if you are trading on US dollar related stuff. When you're talking about non-farm payroll, when you're talking about trading on gold, and some of you guys out here probably have already experienced the volatility, okay, or the fluctuations when the announcements of the non-farm payroll or CPI. All right, so for this kind of trading, I think it requires you to have certain amount of experience in the market where you see things enough, where your subconscious, you already know all the potential scenarios probably is going to happen after the announcements of important news or importance reading. Then it requires you to have a very precise trading decisions making in a split seconds of time. Okay, you don't need, you know, after a non-farm payroll comes out and then you sit there and wait for like a 5, 10 minutes, 15 minutes, probably the trend is already gone and then you have to wait for another month. Okay, so yep, no rush for you because every month we will have the non-farm payroll. It doesn't matter whether or not you are a beginner and then you already missed out the non-farm payroll last week, okay, on the first Friday of April. That is okay because there's a non-farm payroll in May, there's a non-farm payroll in June, so you can just wait and you can see more. So how are you going to capture news trading and you can capture the volatility in the markets? And you can consider to use the stop order pending order types, or you can just straight away use the market execution order. That would require a very confidence a trader. Only you dare to click buy or sell on the spot when things happen. Okay, because sometimes non-farm payroll it might come very, very off from the market consensus, and then the market will just react very, very sharply or very, very strongly with a very opposite reading of what people initially thought. Then it might require you to make a very decisive decision on the spot. So that is why market execution order will be the order that most of the trader out there would use when they want to trade on news. Or you can just set 2 stop order. Okay, you can just set like a one buy stop order and 1 sell stop order, and you probably can think of either side of the market goes. I will definitely jump into 1 order, and yep, you're gonna enjoy the entire trend. But I would say this is a very, very risky way of trading. You can try with a very, very minimum positions to just to experience like how volatile it will be. Okay, like the next non-farm payroll or the next CPI. Okay, you can do, but I would not recommend you to do. If only you want to do, you can try it out with the demo account. Then you can see how things goes. All right. Yeah, but then what's the drawback of using trading on news is that you might encounter a wider spread incurred on a higher trading, and also that will lead to a higher trading cost to you because the liquidity provider might see there is a lot of people, this is a lot of order coming in that split second of time because everyone is trading on non-farm payroll, everyone is trading on CPI, a lot of order just flock in. So you might widen up the spread, so eventually the higher cost trading cost will come to you, will incur to you, and then you need to bear the cost. It means that you need to have a higher profit to cover up the higher trading cost that it usually won't happen. Okay, and again, this is a very high risk on trading on news because sometimes the market just never go the way or the directions that you think of, and you might losing a lot than you can expect it or you can bear. So this is the warning that I really want to give you before you really give it a hands on trading on news like non-farm payroll, like CPI. All right. So yeah, the lastly is the scalping strategies. I would say this is a good way for a beginner to start, because for a scalping strategy is that I would say you can try it out when the market is less volatile. So I'm not sure how many of you guys here know what about Tokyo sessions, know about London sessions, know about New York sessions. So out of these sessions, I would say the market sometimes tend to be more calm. Okay, the fluctuation will not be as big as, for example, New York sessions. Okay, the first 2 hours of New York sessions, or will not be as that fluctuates when you compare to when the announcement of a CPI, when the announcements of the Fed's interest rate decision. So if you are someone that is satisfied with a profit, let's say 50 pips, 60 pips, 80 pips, then you can probably use these scalping strategies. So, and also if you really can spot these patterns, okay, where the resistance levels and the support level is very, very defined. So for example, like you probably see like for gold, 2950 is a very strong resistance for the gold. Every time it touches here, it will definitely come down. Or there's like a very strong support at 2880. Every time when the gold touch there, definitely will rebound. If you spot this kind of flow, this kind of patterns, it would be very easy for you to adopt this scalping strategy, become a scalper, because the risk is relatively low as compared to the strategies like breakout strategies or the news trading strategies. Okay, this is very suitable for a beginner. Okay, if you're just starting to trade, or you want to change a style of trading, you can think of a scalping strategy. And also, just now I see some of you guys are from from the Africa continent. Some of you guys are from, I see, like Belgium or Nigeria. Okay, you might just want to trade at the time zone that suit you. So for Belgium, you probably not going to trade in the Tokyo sessions. When you wake up, you probably already jump into this London session. So if you really want to avoid that, you want to avoid these high volatilities of the markets, you probably want to trade at your lunchtime. Okay, and then when the market fluctuation is not that high, and then if you spot some of the patterns, some of the trend that you are not very comfortable in setting your TP and stop loss and whatnot, then that scalping strategy will be one of the strategies that you might want to consider. Okay, so yep, definitely for the other type will be the market execution, because you already know where you will have a U-turn, okay, where at what price level it will lead to a rebound. Then you can straight away jump into the the order, and then just execute the order on the spot. And also at the same time, you think the market volatility is not that high, so it's okay for you to just use the market execution. And if not, you can try to use limit or stop orders as well, because you are trading with a more defined price patterns. Let's say, okay, for example, I can give you a example, something like this. You probably spot the patterns like this. When it touches here, it will go down. When it touches here, it will goes up. Some this is like a very quick example that I can give you. Okay, when it touches here, it's definitely going to come down. Then you can short here, and it touches here, you think it's definitely going to rebound. Then you can buy here. Ding dong, ding dong, ding dong. This is something like a zigzag flow. Okay, this is like an uptrend channel. Okay, this is the flow. Maybe you probably spotted it. Then you want to jump in with a lesser or lower risk. Then yeah, this is the strategies that you might want to trade with. And yeah, again, for a scalping strategy will be a quick in, quick out. You are not a scalper if you hold your position longer than a day, or you hold your position 4-5 hours. Then you are not a scalper, because scalping means that you want to trade with a lesser risk. The longer that you hold a position, the bigger risk that you could face. So quick in, quick out. So you might not miss out a big trend, but then you will also at the same time trade with a safer manner. All right. And then the last one, I just want to share with you guys, market recently will be very volatile, because you know what happens already. Previously, President Trump has already have a global sweeping tariff, and now the relationship between US and China has become sour. And if you follow the news, you probably know China already take another actions, stop all the order from Boeing. And then the latest move from Donald Trump is they are plotting a new round of tariff for all the minerals import to US. That market see as like again targeting China. So the relationship between these two biggest economy in the world is turning bad. So you have to really watch out the equities markets on the negative side, and also you probably want to pay more attention on gold, on the traditional safe haven currency like the Japanese yen and Swiss franc. All right. And the second point that I want to remind you guys that now Wall Street is already entered into the Q2 earning reports. So like I think Netflix or who is not queuing up to release their earning reports. So probably also will bring in more fluctuations into the market. So if you has been trading on Dow Jones, Nasdaq, you have to be extra cautious, not only on the tariff news that is surrounding Donald Trump, and also you have to also pay attention and with those mega caps earning performance. All right. And thirdly will be on the ECB interest rate decision. So this will fall in next week. It will be on this Thursday. So tomorrow we'll have the ECB interest rate decisions, and the market is priced in a 25 basis point rate cut from the ECB. So you guys know this is doing no good to the euro. So please pay attention if you love to trade on the euro. All right. So this is something that you want to take note. It's scheduled to release at 4:15. This is the GMT plus 3 time. So you do your calculations yourself. Okay. Look at the MT5 time. All right. Yep, here already come to the end of today's sessions. Hopefully might clear your doubts on like different kind of pending order and how can we use it well. And this is the QR code for the Telegram group. If you haven't joined us, you can join for free. Sometimes we'll just update some market alerts and some trading opportunities. Sometimes we'll just update in the Telegram group because I'm not going to see you here every day, right? So it will be a very effective and efficient way that we can communicate on Telegram. Okay, if you haven't joined us, yeah, you are very, very welcome to join in this Telegram group, right? Yep. So here come to the end of today's sessions. I will be happy to answer some of your questions if you have any. Okay, if I'll be able to answer your question, I will do so. Right. Yeah. Thanks for Massimos and also Muhammad. Thanks for your praise. Any question from you guys? Thank Ekman. Any questions? So I see there's no question. So yep. Again, thank you guys for your presence here. It has been very, very meaningful to us. So thanks to again support us and also support Pure Prime. I hope that it might help you to avoid some of the mistake, and then it will help you to amplify your profit in your upcoming trading sessions. All right. Yep. So see you guys in the next webinar. Thank you. Bye bye.